Welcome, 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 welcome. This is Timothy, but I'm known as XFX in this class and this set of times. So, um, this video is going to be an introduction to forex, trading, everything finances majorly. Because making money in forex is not just about trading alone; it's about also how do you manage finances. Even when you make money from forex, like I will always say, forex is a means to an end. In my own view, that means you make money from forex to establish other things. Of course, wealth is not in just one stream of income. Of course, forex can be very very huge, whereby you make quite a lot of money, right? But it still boils down to the fact that it's all encompassing. So that means it's in normal investment. You have sometimes at some point when you make quite some money from forex, you have to understand how to diversify your portfolio, how to invest in stocks, how to invest in real estate, invest in other streams of income. So forex is not all in my own view. It's just one of the ways to get to where the end point where I want to get to. And what is that end point? Whereby I'm financially free, where I'm financially independent, where I have enough for myself to take care of myself, take care of people around me, take care of what God will have me do and all of that. So, but today this is a trade summary. So two things at the same time. We'll do trade summary of trades between June 1st to June 5th, 2026. So in that week I took about five trades. Not about, I took five trades. So let me put it like this. I saw opportunity for five trades, of which I was able to execute just two. The other ones I missed it because they happened between work time. So in my 9 to 5, I have another job I do. Then trading is another stream of income, like I said, which I believe should be as big or bigger than what I'm doing in my 9 to 5, God willing, in few times from now. Yeah. So that's the goal. But that's by the way. So that made me miss some of the trades I was supposed to take this week, and that's because exiness made me miss some of those trades. For example, the trade on GJ, I missed it. That is GBPJPY. I missed it simply because exiness spread didn't tag me in on the trade. I'm still very pained. I'm so pained because it was a very clean trade. It was a very clean trade. So the way I usually do my analysis is right before I get into start work. The moment I step out of the house, get into the office, the moment before I start work, I do my analysis, set my limit trade, then just go to work so that by the time price gets to my entry, it reacts, and most times it reacts and it gets to take profits, right? So of course, like I said to myself in review of my trade last week, I said to myself that a lot of what we do in trading is not just the trade itself. Sometimes it's the psychology, sometimes it's the technical part. Yes, technical analysis you have to. There's no way you won't need to know technical analysis, but technical analysis is a little bit of the big picture. The picture is actually very big, right? So now there's technical analysis, there's the sentiment analysis, what are people thinking about, what I'm trying to trade. There's the psychology, which is like a very big part. Then there's risk management, whereby I'm not risking all my portfolio on one trade because I think it's a very good setup. So it's supposed to let me I have $100 and I'm trying to risk your $100 on one particular trade because I think this is a very good trade. If I take this $100, I can make $100 to $100,000. It usually does not go like that. Usually does not go like that. So a lot of times, so it's in the doing risk management where okay, I'll risk $10 per trade out of this $100. That means I'm giving myself the opportunity to take 10 trades, good, bad, anyone, 10 trades. So and then if your analysis is right, even if you make 5 out of 10, let's say you take 10 trades, and you have 5 wins. That means your win rate is 50% win rate. And let's say each of the wins is 4 RR. So that means in your 5 trade, that is 5 times 4. That means you have 20 RR. So if let's say 10 per trade, that means if you multiply this by $10 by 20, that means you'll have made $200. That means, and then you'll have saved $50. So that means your balance will have been like $250. So risk management will really save you a whole lot in trading. So like I said, so trading is very huge. It's a very huge thing. So you have to, and then it has huge parts where you have to actually pay attention to and learn it very well. So a major thing I usually do in my trading before I start to trade, like this, like these are like my major rules, things that I usually pay attention to, because every trader has to have a rule, a guideline. So, well, that's one of the things I'm also learning for myself. That in trading, yes, some people say, "Oh, I want freedom where I don't work for a boss." Literally, you are the boss of yourself. And at this point, you have to be able to call yourself to control, call yourself to correction. Say, "Hey, Timothy, you did a very terrible job with that trade. Maybe you closed early. Maybe you got into the trade and you were afraid of what if it goes to loss, or you got into FOMO, fear of missing out, and the price got into your entry, or before you got into your entry, the price reacted a little bit before you got into your entry, and like, what if I miss this trade?" Then you enter at a higher point and the price later now reversed, then you try to enter again. It's chaotic, right? So now your rules will always guide you to be able to keep your attention, keep your self calm during the trading period. So my rules are very simple. This is like a bit of summary of it. So directional bias. What is the market doing? Is the market bullish or is it bearish? So I try to determine that first. Then key level. So I'm looking out for other blocks in the direction of the market, fair value gaps, breakout blocks, mitigation blocks, different things just to look out for it. Then there is the entry, lower time frame entries. So lower time frames will either be 15 minutes, it would either be 1 hour, it would either be 4 hour. Majorly is still in the line of key level, right? But sometimes you are able to determine the key level. Okay, this particular entry is where I'm going to take the trade from. And then it also now also depends on, am I a day trader, am I a swing trader? So that also will guide me in what am I trading and how am I trading. So let's start with XAUUSD. That's gold. I love trading gold, and I think one of the persons that made two people that made me love gold, maybe three people now. That's Les, Jamal, then Owaji. I like the way that they just focus on gold and they're killing it. Yeah, okay. I love this. I also want to be able to trade gold in a proficient way where I can say, okay, this is where price is going, and I take the trade and I actually follow my analysis and I make money. So, but that's the major goal of why we trade. When you're not trading so that you can say, "Oh, I predicted this." It's not about prediction. It's about making money, steady, slow, and steady. So let me clean all the charts. So this is gold charts. So I like to start my analysis from the daily, simply because it helps me to see the bigger picture. What's happening on the market? What's the big view? What's the market's large view, right? Because that's like how to trade. You have to see where is the market coming from, where is the market going, so that you don't just enter the market in an haphazard way, right? So now, so we're focusing on last week, which started from this candle. This is from June the 1st to June 5th, right? So, and that's like where we are focusing on. So I'm going to be very fast with it. So of course, this is a video you can easily go back to watch again. So I will be able to just go through it as quick as possible. So so now this is it. And so now one thing that come across to me the moment I looked at this chart. So now I don't use indicators as much as possible because I want to be able to see the chart in in like very clear. Bare. I like it bare. Let me see everything that's going on the chart directly, because it makes it easy for me to be able to analyze what I'm looking at. So now, before we got into this week, if you look at it, the first thing is we're asking, where is the market coming from? Like I said, directional bias. Where is the market coming from? Where is the market going to? So my first analysis was the market is coming to take out this low. So that's my first viewpoint. And this is my project. This is my projection for this coming week. This is already an outlook for the coming week. So I'm trusting that price should come to this place, but of course I'm not speculating. I'm just trading. So I you can use a trend line to be able to see what has the market been doing. So you could see that market has been bearish. Market is trending downward. Bearish means market is going from creating lower lows, lower highs, lower low, lower highs, and continuously like that. On the other hand, if market is bullish, market is creating higher highs, then higher lows, higher high, higher lows, higher high, and it continues like that. That's the trend. So you must be able to identify that easily, and that is easy when you're on the higher time frame. So this is 1 hour. So if you this is 1 hour, so I could see that from this I could so this is ICT will call this um liquidity grab, or we'll call it buy side liquidity. So that means he took out liquidity here, and at the same time, based on my learnings, this is a fair value gap, right? So so there's a fair value gap. So markets reacted from this fair value gap. Market got into there and reacted down. This was on Friday. This was the trade on Friday, May 26th and May 29th. So, but we are focusing on what happened from June 1st, right? So now I go to the 4 hour time frame. So that's how I move. I move from 1 daily. I move to the 1 hour, the 4 hour time frame to see, okay, because I'm not taking a trade on a daily time frame. I'm taking a trade from the lower time frames. So now, because of this sweep that I'm seeing here, and that price is reacting from this 4 hour fair value gap, it already gave me an idea that I'm looking out for sales, right? Because number one, price is bearish. Number two, there's a reaction from this fair value gap that has liquidity taken, which is, we can call this inducement liquidity. So I'm looking out for sell gold, based on the fact that the chart is telling me that price should sell. So based on that, and then this is 4 hour time frame, right? So I can also see. So let me go to the lower time frame a bit more. 1 hour time, 1 hour now. My network is kind of slow. Sorry for that. So okay, let me just go on while we wait for my network to catch up with me. So now I can say, okay, I'm looking at this point. Okay, next. Okay, so let's go back to this. Um, okay, sorry for the breaking transmission. So let me go to my notes. Close this. Open it again. Yeah. So network is slow. Okay, so going to the 1 hour time frame now. Yes. So on the 1 hour time frame, this was this is not here. That date that did not exist yet. So back to from the daily time frame, like I was walking you guys through. I go to the 4 hour time frame. So based on the 4 hour time frame, I could see based on my learnings and my studies, I said this is a fair value. This is another block, but this other block is too wide. It's too wide. So imagine if I'm taking my trade from here and if I'm taking my trade from here, then my stop loss is here. This is too big. This is like a very huge stop loss. So I'm only going to get 2 RR. So I don't trade like that because it's too wide to use as a stop loss. So now, of course, but again, this is also telling me that price is selling. So I'm expecting price to come react to this zone before selling off. Like I said, price does not go straight down. Price will always have up, down, up, down, up, down, up, down happening. So if you go to then I went to the 1 hour time frame on Monday. So for me, again, for my learnings, this is another block, right? This is another block. Some also call it key level. So this is another block, and it's also a key level. So two things aligning at the same time, which makes it very, very sweet, right, for me to trade. So so based on the fact that I saw this straight away, I immediately saw it. I set my target. Um, I set my trade. So I was expecting to trade from there. I was targeting 4R. I wasn't trading to cash the whole thing at this point. I just took 4R. Then the moment price tagged in, I waited and went for the lower time frame. So now there's two ways to trade. You are either entering at certain limits, or you are taking what we call market execution. So that means you wait the moment market get to your zone or key level, then you now watch for reactions in that particular place or zone to now see how to follow the market downward or to the direction it's going. So now from this zone, I could see this engulfing candle. So we call this let me find the tool to circle it. 1 minute. Okay, so this is an engulfing candle, right? So and the moment I see that, okay, let me use this. Engulfing candle. So which is this particular one. So you could see engulfing candle means one candle closed below the other one. So you could see that it closed below it. So immediately I saw it, I targeted it. That okay, this has to be my second entry. I set a target for it that this was going to be my second entry to capitalize on the trade and get more, right? So I took it from here. My stop loss was right above this. So this for this one now, um the stop loss is more tight. And then the evil part with tight stop losses, if it's going to go against you, you are losing sharply. But if you have larger stop loss, sometimes price will react and still go your direction. But then that's the risk, right? And then this is based on the fact that I've been learning about it. So this is 10 RR because I'm targeting price to get to this low, and of course that's just me targeting that. Okay, I'll just take this, then move out. So so that's two trades. Second one, the first one is this one, which was this first one, and this one was 4RR. Then the second one, which is on the 15 minutes time frame, which gave me 10RR. That's 14RR now. So at this point, this was already on Wednesday. So this started from Tuesday into Wednesday. So now on Thursday, so I went back to 4 hours time frame because again, like I said, price does not move straight down. Price will always create zigzag. It will always move in zigzag manner. So price will give you multiple entries a lot of times. So you have to be able to go back and take opportunities even after you've taken one. And then, like my mentor will say, there will always be another chance. So I waited for it. So I saw this on Thursday. This happened. This this was created. So on Thursday, I saw that this was another opportunity to take another entry from this fair value gap. So fair value gap, like I said, key levels. One of the key levels I always use is fair value gap. So then inside it, if you go to the 15 minutes time frame again, price reacted. So now this is, of course, this is first of all an inducement that happened um in that before that zone that I'm targeting. This is an inducement liquidity, but inside the fair value gap, most times I always wait for inside the fair value gap. I'm expecting to see like an engineered liquidity being created, something like that to happen, because when that happens, it shows me that the market actually wants to actually sell. So it came back, clear it a little bit. So based on that clearance here, then it created again an engulfing candle. Can you see that again? Can you see that again? So because it's important to be able to pay attention to those repetitions. Why? Because if I'm able to spot that repetition, I'm able to take the same trade when I see the opportunity comes up again. So this is an engulfing candle, second engulfing candle that creates an opportunity for us. So if I'm going to take this, I'm entering directly from this engulfing candle. Then my stop loss above that engulfing candle. And again, where am I targeting this time around? I'm targeting this low right here. Then and I will explain why I'm targeting that low in another video. So this is a clean 6RR trade, right? So then moving from there, then on Friday before the NFP news, I was expecting that market was supposed to, let me remove this. Market was supposed to come take out this low, then this low, these two together. But one thing that happened on silver and gold, they move almost the same way. But if you go to study SMT, you should study that. SMT tells you that markets will always go, there are some markets that work together, they go in the same direction. So you are able to tell if markets should, sometimes markets will hit a low in gold, then it will not hit a low in silver. That is like a signal to tell you market is going to go in the opposite direction most times the next time. So now if you see this low in silver was taken out, this low, so there's two low in silver as well. This one here, this one here, and this one here. You will see that in silver, these two was taken out sharp before NFP news came out. But on gold, the two was left out before NFP. So that signal to me that price will react back, then to come back and take them out. So of course, how did I capitalize on that information? Then I marked out this particular fair value, this particular order block. That was my target. That was my waiting zone. So I was waiting for it. So this was my other block. This was the other block I was waiting to actually take trade from. Then we'll still go to the lower time frame to see the way were we able to get in the engulfing candle again. Was there a candle reaction targeting this low as well? This is over 8 hours. So if I'm good, and that's if I'm leaving exactly on where I plan to have left the trade. So again, if I'm looking at it from a lower time frame point of view, this what this three candle is called, but I'm not going to touch on that in this particular class. There's something this three candle is called in trading. This because of based on how it's arranged. Then you could see there's like a engineering liquidity a little bit above that high. If I'm going to wait 5 minutes, you should be able to see it a bit better. Yes, could see how the market reacted here, but that was not my concern because it's NFP. I don't try to do lower time frame catch in NFP. NFP is like catching a knife, so just set your thing and move out as quick as possible. So that was the three trades, 4 trades that I saw on gold, which accumulated to giving me about 28 hours or thereabout. So then there's GJ as well, GBPJPY. This trade was from I think about this was on Friday. Yes, Friday. I didn't take this trade. I saw this one as well. I didn't take this one. But based on the fact that I saw, okay, so now let me go to the daily time frame. So what inspired this trade was that on the higher time frame, I was expecting that price was already going up, and I was expecting that price should go to take out this particular high here. Of course, I can even see that there's a reaction that I'm expecting to happen when market opens towards this upside for this particular coming week, this particular week that we're entering tomorrow or that we've entered today. So, and to be fast, so if I go to the 4 hours, so I was expecting to take more trades in that same direction, capitalizing on what I've been able to see. So I'm looking for my key levels, right? So I've seen directional bias, market is moving up. I'm looking for the next one. So I could see that I was expecting that price would come to react here. So now, of course, I saw that there's liquidity cleared here, reacting from this other block on the lower time frame. So I went down to 30 minutes. I think my entry was from the 30 minutes. Yes. So you could see this was my other block. So I marked it. This has given me engineered liquidity as well from here. This was an engineered liquidity. So sorry, I don't know what's happening. Okay. So either way, that's engineered liquidity. So and based on that, I set my entry. Price moved up that day. Then I saw it moving back down. Then of course, based on my back to back learning and going over trading again and again, I could see that the market is creating another opportunity for me to be able to take more trades in this particular zone. So I spotted another other block. This, like I said, I'll probably do another video, another block, and all of that. I will see this on the 30-minute time frame. So I saw it, took it because this is a extra entry to get to this same zone. Price was going to take out this high before price starts reacting back down. So and you see market got to that place, cleared it out, and the NFP sales came in and rallied downward from there. So amazing trades, amazing week. All in all, money was made, some money was lost as well. All part of the whole journey, right? So this is all for me tonight. Today, wherever you're watching, whatever time you're watching this is actually 9:30 p.m. in Nigeria. So, by the way, we're making money, right? So, have a great trading week ahead. Have a lovely week. I will still share my trades, share what I can share this week as well. Let's make money. and have a great week ahead. Thank you.